Good morning, everyone. We are very happy that you could make some time and you want to join the last MCCG of this year. Before we start with the usual introductions, just a few practical words on how the meeting will take place. As you might be already aware, the session will be recorded, and then, as was the case last time, we will publish the recording on both the NEMO committee and ENTSOI websites so that you can stream it also at your own time. And also, as was the case last time, please, if you have any questions throughout the sessions that will be presented, please share them via Slido. You should see the link on the bottom left part of the screen, or you can also type in your browser of choice, the slido.com, and then use the code which you see, and that should direct you to the window where you could be typing your questions. We will be addressing those as we will go at the end of each agenda section. And also at the end, if there will be any other remaining questions, we will try to tackle as many of them as possible in the meeting. But rest assured that, as was the case last time, we will be sharing a compilation of all the questions in a follow-up Q&A document. With that, I would then give the word to the MCCG conveners to also welcome you and guide you through the agenda.
Good morning, everybody. Good to see you again. This is today the third MCCG of the year 2025. So we had met already in February. We had a fully dedicated session on 15 minutes. We had a new gathering in June, and this is the third and last one of the year today, where we will basically tackle a bit of the follow-up of what we presented to you in Q2, but also new items. And we will actually start with that. We will start with the very first weeks of operations of the 15 minutes go live into the day ahead market and the last wave of introduction of 15 minutes granularity into the intraday time frame. We will reserve quite some time here to gather feedbacks, present the outcome from the NEMOs and TSOs perspective, and we will get a ping pong and Q&A session already on this part. Then we have two interlinked topics that will follow. One on the scalability report. We present this for the first year publicly in a complete version during the MCCG. It's a compliance exercise of the NEMOs primarily, but it is also very much an anticipation work to find the right adequacy between market appetite, expectations, and system capabilities. Which brings us to the last topic of the morning before the break, which will be this corrective measures item, this insurance that TSOs and NEMOs are preparing. We are getting prepared in case it is needed. And we will describe the high-level mechanisms of application, targeted measures, so basically how it works and what to expect from the market participant perspective. Short break during this morning session, 10 minutes, shortly after the half of the meeting. And we gather back to discuss one of the operational incidents that made our community busy beginning of September in the intraday continuous timeframe. And we will report on what happened, measures taken, and so on after this downtime of the XBit platform. Then we will have half an hour dedicated to a clear follow-up and report status on the progress made on fallback improvement in the day ahead timeframe. This is what we presented to you in June with all, let's say, candidate measures from TSOs and NEMOs. And we will now elaborate on the pros, cons, but most importantly, what was implemented already, what is in the pipe, and what is just as not fit for purpose. We go back to intraday continuous with an important go live under item 7 now. It's implementation of intraday cross-zonal gate closure time. We have now an exercise where TSOs will report on the very first go live in January next year. Some borders will already see this cross-border allocation possible in between -60 and -30 minutes before delivery. And then 8 and 9 are quite regular closing topics or last part of meetings we have. It's a tradition here. We end the session with the regulatory deliverables. We have one methodology to report. It's a follow-up of the methodology that we already updated a few years ago. Consultations was open, and we will report on what was submitted by the NIMOs to Acer with regards to this harmonized min and max price methodology of intraday and day ahead frameworks. It will be followed by what we basically could call a work plan roadmap of initiatives and projects, making TSOs and NIMOs busy with implementations of requirements, of new initiatives, of regulatory items, and so on, with a slight focus on the day ahead co-optimization topic, this co-optimized allocation between balancing and day ahead timeframes. We will close this, this item 9 with this specific follow-up as well from the previous meeting. And it will be, let's say, shortly after 12. We still have the half a day format today. Shortly after 12, there will be a closure meeting. Please bear in mind, Christina will remind it, that you have the opportunity to submit questions, and we might or will go through the Q&A 5-10 minutes for each of the sections after the presentations of the speaker. We are not parking everything for the end of the meeting. Please drop questions and we will answer them. It will be followed by a written publication of Q&As, like we always did in the past on ENSO and NEMO committee website. So everything that will be unanswered or even answered but very important question will be put in a written form. Please, Andreas and Zeli, have a say as well, and we give it a start afterwards.
Hello from my side. I'm Andreas Panaklis, co-convener of the MCCG group, and welcome everybody here to this webinar. We hope that you find the information presented here important and useful, and we look forward to delivering this information to you.
And good morning on my side. Welcome everyone to that meeting as well. I'm Zélie Gauthier. I'll be co-convening on behalf of Energy Traders Europe for market participants, and I'm looking forward to all your questions and for the slides. Thank you very much for that meeting.
So the scope of let's frame a little bit the MCCG discussion that will take place here, and all the questions that you're going to ask. And we will focus on the CSEM guidelines here. So we'll basically focus on capacity allocation and timings, products, and the settle platform. And will not be part of our discussion anything that has to do with the capacity calculation and the ACC and impact assessment of hybrid coupling and all things that are outside of the market coupling process itself. So please stay within the CSEM topics, and all the questions should be focused at this part of the field. So Christina, can you please go over the questions? Or should I do it? Okay, so yeah.
For the action points, yes, either if you or Pierre could recap, that would be great.
We basically, you see it on screen here, we are answered already. Everything that is flagged as closed. We are here having a batch of questions or requests following the presentation of our testing plan for the 15 minutes project. So the so-called member testing, the one that took place over the past weeks and months for the 15-minute project, are now fully closed, obviously, as you understand. We will also discuss this full decoupling training in November. And yes, TSOs and NIMOs are organizing this in Q4 as planned. And the two last questions are being answered during the meeting today. The one before the last is all about fallback improvements. We will report on what is done already, or will be done in the coming weeks and months, or will not be done because it is not fit for purpose. And we reported back already on this last line, action point on IDA's liquidity, on the level of liquidity for IDIs, but not necessarily per bidding zone. It is something discussed amongst NIMOs and TSOs. We will basically not do a quarterly exercise on that. There will be plenty of information as part of public reports of NEMOs and TSOs on that, but we are not entering into an exercise that are basically too frequent. We might be doing another yearly exercise, and we had the first year of operations closing in June in the last event. This is why we had reported those data, but we decided to have a yearly presentation of this, and everything channeled through public reports of NEMOs and TSOs. So 15 minutes. This is quite the achievement we want to go through today. Together with Zeli and Andreas, we wanted to give some hints on what happened. It's twofold. If you see on the next slide, we had one 15 minutes go live, but on 2 time frames, and we wanted to remind it. We had this big bang day ahead approach, the one we discussed in the previous 2 MCCGs heavily this year. It went live a few weeks ago on the 30th of September. And we had the full completion of the intraday time frame with the wave 6, mostly focusing on quick borders and bidding zones. We will report on these first weeks of operations in both cases. But this is what we had in mind, and we will exchange after this presentation together with you on how you experience these first weeks. From the point of view of TSOs and NEMOs, the go live was very smooth. It was a very big challenge, a multi-year challenge, as you noticed, through the different events and MCCG. And we are happy to see this happy ending since 3 weeks now. And we already have enough information to basically give you some indicators on usage of the resolution of 15 minutes, impact on the overall processes. How is this MCO ecosystem basically behaving under this new framework, and what is the appetite of the market for this granularity per product? So we have invited one expert able to report on these different usages of product. So I propose we start with a day ahead, 15 minutes, let's say celebration and first week of operations before we have a word on the last wave of intraday. And I would now give the floor to Joel, our algorithm experts, that will be accompanying us today on reporting these new indicators in light of the change of operational constraints we reminded on the slide. Please, Joel, dive in.
Thank you, Pierre. Yeah, I'm Joel Luxema. I have worked in the PCR algorithm group for many years, and in that capacity was also heavily involved in preparing the algorithm for the 50-minute go live, which by no means was a PCR only activity. It was very much a joint effort together with the support of all the NEMOs and the TSOs. So today I can present you some figures providing some insight with what happened with regards to the performance of the algorithm since the 50-minute go live, and of course also the changes that we've seen in the usages of the different products and requirements. So to start, we prepared some panels where we provide some indicators. For the setup, we have in the left top corner the time to first solution. So this is an indicator that provides us information when Euphemia is able to find its first solution. That does not mean that the calculation is over. There's still time, well, provided we are within the operational limits, there is then still time for Euphemia to improve that solution, finding more welfare, finding better accuracy. But that is the indicator that we have in the left top corner, and which is essentially when we can secure the success of the coupling session. And then we have some panels around that time to first solution metric, showing some usages. Then perhaps still coming back to the time to first solution indicator, you may notice between the indicators in blue prior to the 50-minute go live and the indicators in orange since 50-minute go live. There is this huge increase, which may look alarming, but please keep in mind that we have been preparing for this go live, of course, for many years, in fact, and already many of the improvements that were needed in order to support the 50-minute go live have been implemented in the past. So the time to first solution in the 60-minute context actually diminished already quite a bit because of many of the successes that we've achieved prior to the 50-minute go live. So I think we have it on the slide. There were improvements in the algorithm itself, but also the hardware allocated to the algorithm has increased significantly. So that creates a bit of a misleading situation because we have extremely excellent performance prior to the go live. And that then translates in this uptick in the time to the first solution since the 50-minute go live. Notwithstanding those relatively good results, we of course still want to make sure that we can secure a robust operational process. So also more time has been allocated to the algorithm. Prior to the 50-minute go live, 17 minutes were available. And someone conveniently translated that because we use seconds rather than minutes on the vertical axis. So the 17 minutes correspond to 1,020 seconds. And today we have half an hour or 1,800 seconds available. So in that sense, the indicator is actually giving a very, very optimistic view of the situation since the go live. So sorry for the lengthy explanation, but I think it can be helpful to have that context in mind. Then to run through some of these panels, in this slide we focus on the number of block orders, and perhaps starting at the first quadrant, so the right top corner, we have the total number of block orders, and maybe we should have improved our labels because I imagine you struggle to understand what we mean with the TNBO CO1s, but actually these are the total number of block orders of the C01 type, and the C01 type, those are your standard block orders. So this corresponds to the blue line, and you can indeed observe that there is an uptick in the number of the standard blocks since the 50-minute go live. Whereas if you look at the other lines, so these represent the other types of blocks that Euphemia supports, the C02, those are the linked blocks, the C03, you can barely make them out at the bottom because they're not frequently used, but these are the flexible block orders. And lastly, there are the C04, the exclusive blocks. And their usage seems to have been quite stable, also with a go live of 50 minutes. And then perhaps for the exclusive groups and the linked families or the linked blocks, we can also look at the indicators that express how they are used. An exclusive block order is one among many in a group where Euphemia is then tasked to select only one. So that's why we have this different indicator of the number of exclusive groups. But that seems to also not have increased by too much since the 50-minute go live. And then perhaps for the linked families, So these are the linked blocks that are linked to each other to span a family. Yeah, and then there are some ebbs and flows, but they don't seem to correlate with the 50-minute go live. Maybe you notice there appears to be a jump up, but that actually already happens towards the end of September. So it seems disconnected from the 50-minute go live. Then maybe we can move to the next slide. Again, the same setup. In the left top corner, the time to first solution indicators, now focusing on scalable complex orders and the number of curve points, which are other metrics of complexities. We now have the scalable complex orders where we actually see a downward trend. I must admit I can't quite explain if this is indeed a trend or just some seasonal effect, but at least it does not seem to increase. So in that sense, should not be a concern for performance issues associated to the usages. And the more interesting graph is perhaps the one in the right bottom corner, where we look at the number of curves, or specifically the curve points or the curve steps, where we see this huge surge, which of course is not surprising because there are 4 times as many periods with the 50-minute go live. So you would also expect a 4 times increase in the number of curve points for those that start using 50-minute products rather than continue using the 60-minute ones. And this is then indeed something that we can evidence in the data. And then we can perhaps continue our journey through the usage indicators. Here we look at some topological usage indicators. Number of bidding zones and number of lines did not increase. Here we do a breakdown in the bidding zones and the bidding zone lines with regards to the time resolution they represent, where we see that now all bidding zones except for Ireland switched from 60 to 50 minutes, and then Ireland remains as the only 30-minute bidding zone. And then we can see similar trends for the bidding zone lines. So perhaps nothing unsurprising there. And like the curve points before, also for the flow-based constraints, we see this similar increase in the number of constraints, which roughly corresponds to the 4 times increase, because we now have flow-based domains, not per hour, but per 50-minute period. So again, a huge increase. It explains why Euphemia sees an increase in the time it needs to find solutions, but this increase in the data was fully in line with expectations.
And perhaps, Joel, just on this two rights panel, bidding zone and bidding zone borders, I would add that more than the evolutions, obviously, they are similar before and after go live. It is the absolute level of bidding zones and borders. TSOs and NIMOV have reached and prepares this level of scalability of the central platform of SDAC to get there. So as you notice now, we are computing with a 50-minute resolution, 70 plus bidding zones, 100 plus bidding zone borders, and so on. This is quite an achievement. It was not done in 6 months, not even through only the last 1 or 2 years. The journey was long from the inception of the day-ahead market coupling up to this complexity we have, and still very much sustainable against the new 30-minute calculation time. It works. This is the message we bring, and we will of course discuss the scalability in another part of the meeting. following this one, but I wanted to remind you that this level of bidding zone number, bidding zone borders numbers are already quite an achievement. We had to secure that before moving to 15 minutes.
Yes, thank you, Pierre. And perhaps I can continue that trend of discussing the successes of the 15-minute go live, because perhaps in the next slide, we also look at the adoption of the 15-minute products. So with the 15-minute go live, we offer the possibility to also allow orders to be submitted at the granularity of the 15 minutes. But on top of that, we still offer the possibility to continue using also 60-minute and even 30-minute products. And what we illustrate in these two panels are the submitted orders, although in the left-hand panel, we focus specifically on the curves, which then still represent the majority of the volumes. And on the right-hand side, we look at the matched volumes, and for the matched volumes, we lump together the different product types. So if you squint real hard, you can distinct the different shades of blue, orange, respectively gray, to differentiate between the different time resolutions. But I do recognize it will be a bit challenging to discover those nuances in the graph. But still, the majority of the volumes, as I said, comes from the curves. And what we can clearly see since the 15-minute go live is that there has been a huge adoption of the 15-minute products. So I think that only celebrates the success of the 15-minute go live.
This is clearly what the last two slides are showing, Joel. This slide and the next one, this is really the proof that you are using this new granularity significantly. Out of the 10 plus terawatt hours that the stack algorithm is receiving from the stack NEMOS, most of the submitted volumes are using this 15-minute granularity. This is clearly an indicator of the success, and you will see these three lines now, top, middle, and bottom, that will again highlight the trend depending on where we are considering the reporting period.
Thank you, Pierre. No, indeed, this last overview, and then we'll stop pouring more and more graphs onto you, illustrates somehow the same data, but now using pie charts rather than the stacked diagrams. So you get a better sense of the percentage use of the different time resolutions. We created in the different rows the distinction between the overall matched volume versus the matched curve volume, and then lastly the matched volume from other products, meaning any type of block order or scalable complex orders. And on the different rows, you can see the period for which we did the reporting. So perhaps today, the first two rows are not providing too much insight because we look at 90, respectively 30 days of history. So this includes quite a significant portion of 60-minute periods or periods prior to the 15-minute go live, which is then why you still see a significant chunk of 60-minute orders being used, because prior to the 1st of October, that was the only product type you could trade. But perhaps the bottom row is the more interesting one. This is then information from the last 7 days. And if you recall correctly, we compiled this data with data up to delivery date of the 20th of October. So then for that specific period, the last 7 days already demonstrated that matched curve volume corresponded to 83% of the volume. The total volume, that's where we have the 83%. For the curves, it's actually 84%. And that means that for the blocks, we have a somewhat lower but still significant, I should say, for the blocks and complex orders, we have the 72% of the matched volume now being traded as 50-minute orders. So just a different visualization of the same information we already looked at in the previous chart. Okay, and then I think I should be handing over, is it to you, Andreas, for the 50-minute update?
Hello from my side. So as Pierre pointed correctly in the beginning of this presentation, apart from the day ahead, market coupling being accepting 15 minutes products, we have the same situation in the intraday market. And the last wave was the Greek market and the Greek-Bulgarian interconnector that moved to this granularity of 15 minutes. The scheduled go live was at the end of September. And basically this completed the whole European area intraday market being at 15-minute granularity, which was it was a success. So everybody, both NEMOS, NX, and ADMIE reported that everything went smoothly, and there were no issues with this transition. And now the whole European intraday market has a 15-minute MTU. So yeah, this was also a success, and that's it. So we can go to the next part of the presentation.
Perhaps to also tackle, Andreas, the point raised by Market Participant Association's convener. We had received 2 questions on Slido, not necessarily linked strictly on the topic we just discussed. We will tackle this. But we also received from Energy Trader Europe and Eurelectric some questions. Most of them will be tackled in the written Q&A document. So we basically had a task for NEMOs and TSOs, I think it is linked to the question of Jérôme on the screen, to explain the reasons of potential delays or risks messages sent in operations basically since go live in the last 3 weeks. So we will tackle it. Not all of these events are at all related to 15 minutes. Still, we will report. We had a question on price, let's call it volatility, for a quarter hours within an hour. We remind that we are mostly agnostic to price levels as NEMOs and TSOs, but we can detail a bit more on what we see within an hour, because it is indeed something that is new from this go live within an hour. And this is why NEMOs created an index, an harmonized index of hourly price, the clearing price remaining at 15 minutes granularity now. We can see that within a given hour, there are variations of prices, and some questions were raised on that. We also got questions on these paradoxically rejected orders from the market participant. Technically, it is something we explained through different Q&As and presentations. The coarser granularity, the 60-minute curves especially, can be rejected. This is obviously new. In the past, only blocks could be paradoxically rejected. We will remind these principles, but we will also potentially quantify and come back with some indicators on that in a written form. So we got this from your associations already. And yeah, we see a question. The third one is very much related to that. Yes, it is technically new. We informed the market already, but we can discuss likelihood of occurrence, how deep it is, and so on. And we have this locked on TSOs and NEMO sites, and we will come back with those answers as part of the Q&A document directly.
Yes, and also regarding the question about the latency, we'll address that at a later stage of the presentation.
Yes, latency is really related to intraday continuous in your question, probably Enrique, so not at all linked to what we discussed, but we take it for the rest of the session. Of course, we log it. Last question, what is it? Could you please complement them after meeting with a breakdown by a bidding zone? Yes, it is not something we do usually, this level of granularity, so we can log the question and we will come back to the audience. How long will the 60 minutes product? Sorry, should I continue, Andreas, with the question?
It's just answering the next question. There is no plan for not having 60-minute products. So it's going to be kept.
Yes.
Perfect, thank you. Then I guess we can move on to the next topic. There's one more hand raised by one of the participants. Would it be possible to raise the question via the Slido? Simon? Please, if you could try that, that would be great. If you have any issues, then we can also maybe try to unmute you in a moment.
Yeah, let's follow the process. Let's channel everything through Slido or your member associations, let's say convener. We wait for a minute if Simon can do it. Otherwise, we take everything by email and we log it and we put it in the Q&A, obviously. Yeah?
Yeah, but to also save some time, we can also come back to the question coming from Simon and then maybe move now to the next topic for the scalability report.
Scalability report. So Chiara and Vladimir, we'll dive into this all-time frames, intraday auctions and continuous, but day ahead as well. Please, Chiara, guide us through what was done through this compliance exercise, anticipation of market trends exercise to size correctly our joint systems. Guide us through, let's say, the methodology of the work you have conducted. It's a yearly exercise. Why we are sitting today on this topic for the first time, while I think it is the third time that NIMOs publish such a yearly report, but we wanted to go publicly today with the result. And what are the main takeaways, Chiara and Vladimir, of what we measure versus what we see of market trend? It will be very much useful as a transition for corrective measures. So please.
Thank you, Pierre. So I can start by saying that this exercise is made in compliance with what is prescribed by the algorithm methodology. This is an exercise that NIMOs and CSOs perform yearly in order to estimate the expected level of scalability both of SDAC and CDC systems. Essentially, what we do is to perform some stress tests to see if the systems are able to tackle the expected efforts in the years to come. This exercise is not new. We usually publish it in the CATM annual report up to the last year. Then, starting from this calendar year 2025, we started publishing it as a separate standing-alone report. This is due to the fact that starting from this year, we included also the IDAS. So due to the larger scope of this report, we dedicated it more space. And starting from this calendar year, meaning starting from the report of 2024, because it's based on historical data from 2024, we start publishing it by the end of October each year. And this report now includes not only the day ahead, but also the intraday continuous and intraday IDAS. So I would start with the coupling algorithm, meaning the day ahead and IDAS, and then I will leave the floor to Vladimir to dive into the seed continuous part. Can we go? Perfect. Okay, so what do we look at when we talk about scalability regarding the coupling algorithm? Of course, is the time to first solution, the one that Joel anticipated based on the most updated data. What we do in the scalability report, we look at what we expect for the time to first solution in the years to come. And in order to do that, we take into account not only the historical usages of the product projected into the future, but also all the anticipated requests for change that we have in the roadmap. So what we do is to simulate two scenarios. One closer, which is the year plus one. For this year is the 2026, in which we anticipate the usage of the existing product and the expected requirement that will go live by 2026. And another scenario, which is the far future, in this case is the year plus three, the 2028. And once again, also in this scenario, we included all the anticipated usage based on the historical data set projected into the future and the expected RST, which will go live by 2028. In this way, we see if the algorithm is able to tackle the challenges which are foreseen based on our roadmap. For day ahead, the scenario one, which is the 2026, includes some several NIMOS expansion and also the introduction of core advanced hybrid coupling. All the list of the RFC which have been included are listed in the scalability report, which has been published, I guess, 2 days ago, maybe in October 22. So if you want more information on the batches, you can have a look there. But essentially, these are the main change. While in the scenario two for the 2028, we have not only the inclusion of the core advanced hybrid coupling, but also the integration of several energy community bidding zone, as well as the Celtic interconnector between France and Ireland. Regarding the topology for the simulated scenario, we have that, as we saw, the network constraints were multiplied by 4 in relation, for instance, for the flow-based data, and also for the product usage, the curves order have been multiplied by 4. While we, since starting from 1st of January 2025, the PUN and merit order were phased out by the Italian bidding zone, we do not have anymore these products. And we have that the scalable complex order replaced the complex order. For all these products, the number of curves, the number of orders were multiplied by 4, as well as for the cube orders, while for the blocks order, we use the organic growth expected by the roadmap. And these are the scenario we tested, but let's see the results. That maybe it's the most interesting part in the next slide. Yeah, here you see on the right of this slide, we have the expected time to resolution, the 2 line, the green one and the orange one. The green one is the 2028, so the far future scenario, while the orange one is the year plus 1, the 2026. And we see that in most of the session, the algorithm find a solution below the 30 minutes, which is the running time after the go live of 15 minutes MTU. And anyway, also in the most challenging session, which are 1 session for the 2026 and 2 sessions for 2028, the algorithm finds a solution below 34 minutes. So from these results, we can say that we do not see any major challenge there. And the algorithm, as shown by Joel, was able to include the 15 minutes go live, and we do not see any concern for the future, because the results are quite reassuring that the algorithm, based on our assumptions, seems to perform quite well and find a solution in reasonable time in all the simulated sessions. And this is for the DAC. What about IDAS? In the IDAS, the story is quite similar, because the according with what is inside the algorithm monitoring methodology, in order to simulate the scalability, to assess the scalability of the IDAS, we should act with a mutatis approach. So we do the same thing we did for the DAC, just transferring it to the IDAS scenario. So also here we have the two simulation, one for the scenario of the year +1 and another one for the scenario of the year +3, in which we included all the RSC which are in the roadmap for the IDAS. What should be said regarding the IDAS, and this is a peculiarity for this year, because the IDAS went live in 2024. As I said, usually in order to build these data batches, we look at the previous year of the results of the market. We didn't have an entire year in 2024 for the IDAS, so we just compiled these data batches based on half 2024 and half 2025. With this assumption, some growth rate that were estimated could have been exaggerated, because also due to the fact that the IDAS were at the very starting point, some growth rate for some usages was just the initial growth, and maybe this growth will not be observed in the future. So this could have led to some exaggeration on some specific requirements that have been included in the data batches. But for sure, this will be corrected starting from the next year, due to the fact that we'll have a more stable historical set of usages in 2025. Also here, if we go to the results, we see that the same chart we showed before. Now the difference is that the running time for the IDAS is 7 minutes, not no more 30 minutes as in the day ahead. Once again, we have the orange line, which is the 2026, and the green line, which is the 2028. While for 2026, we do not have any major challenge, because the algorithm finds the solution below the 7 minutes for all the session. For 2028, we have 5 sessions in which the algorithm struggled in order to find the solution, but we saw that with different configuration of euphemia, the time to first solution was found in 8 minutes. And looking at the specificities of these 5 sessions, 3 out of these 5 are the main challenge can be traced back to the fact that the input of the simulation involves some usages that the one that I was saying before, that have been exaggerated due to the estimated growth rate. In particular, the linked families that were not used in 2024 because the usage was around 0. Then in 2025, they became around 20. And by projecting this growth rate into the future, this led to a very huge amount of linked families that for sure that will not happen in practice. But this was mainly a technicality, which then is reflected on the results. What we can take from this, that also in this not, let's say, very probable situation, also in this case, the algorithm finds the solution in most of the sessions. So also for the IDAS, we do not see major concern, and since that the algorithm will perform quite well. For this estimation of usages, we are confident that starting from next year, we will have a more stable historical data set in order to project into the future the expected usages. I think that with this, I concluded the part related to the coupling algorithm. And maybe I can give the floor to Vladimir for the seat continuous.
Hey, Chiara, thank you very much. Good morning to everyone. So let's move into the continuous trading. So in principle, the background and the driver for the continuous trading is the same. We have some history. We have some obligation to look into the markets, how it will look like in the future. There are a couple of years that we need to simulate, and there is a pipeline of the CRs that we need to consider for that. Maybe to start with the CRs, there is lot of CRs that are considered. There's one which is under clarification, and it's related to the application of flow-based in continuous trading. There we have several, let's say, approaches which are under clarification. So until this is clarified and there is a prototype, logically, this cannot be included in the scalability report and scalability study. So that's just to mention that sometimes there may be some projection in which we may miss something because there are logical reasons for that. Now, with regard to the SIDC, there is a little bit difference if we compare it in SDAC. In SDAC, we are looking purely into the matching process and into the algorithm itself. SIDC is a little bit more complex from the perspective that, of course, we have also the core that needs to match the orders, but SIDC covers a little bit more functionalities there. So all the interfaces, all the shipping, and all these parts need to be part of the scalability study, because we need to ensure if we process orders, we created trades, that we need to also ensure that we deliver timely information to the shippers. There's very limited time for that in the continuous trading, and we need to ensure that there are no imbalances either on the level of market participants or on the level of the borders. So from that perspective, there are many items that we are looking into it. SIDC, continuous trading, is quite flexible in terms of configurability. So if we, for example, talk about the topology, about the borders, delivery areas, market areas, or parameters of the products, which are then translated into contracts, there are in principle no limitations. However, this configurability is then translated into performance. So we can configure topology which will be much more complex than we have right now. But in the end, it implies that the measure would require much more time to process orders, to generate outputs, to create local order book views. So all this then translates into the performance. And that's the basic approach that we use here for the scalability study. And in the end, to manage that, we then need to impose some kind of load management. That's quite important. Comparing to the history, we've changed a little bit the approach, because in the history, when we look into scalability, it was purely based on the agreement with the service provider via SLAs. But from 2024, we are looking into more technical aspects of the system. So we're really putting this system under stress test to really discover the system limits, which allows us to operate. I think that's something that you may also realize, because if you get to the system limits, and from SIDC continuous trading, if the system is quite robust, it will deal with the situation, but it may mean that there may be some latency which is increasing, which we are close to the system limits, and therefore it's important to handle that, to have sufficient headroom to really have very good load management in place, and that then translates to the corrective measures that we will translate through. Now, when we talk about the scalability report and the approach for the testing, so we have in principle two types of scenarios that we apply. One is a long-run test, and the other one is short-run test. What's the difference? In the long-run test, we focus pretty much on the base load, base processing. Of course, we include several peaks because there's a standard in the operation, but there we look really how the system operates if it is under the stress for 24 hours. There's the basic call. In praxis, we are putting the system under the stress for 30 hours or 30 plus. That's what we want to see there. For short-run stress or short-run testing is a little bit different. There we simulate a very specific stress or stressing situation for very limited period. So what we have there, we have higher peaks, with more order transaction peaks, which may be larger. So it's a little bit different. And also the duration of the stress is limited. So for example, within 3 hours, we are able to push into the system the same amount of the orders that in normal case would be done within the 24 hours. So it's a different type of test, but we need to look on that from several perspectives. And for both long and short runs, we are applying different scenarios with different shape of the base load and peaks and duration of the peaks and so on. So this is quite important. Then the stress test, and that's the most important added value of the scalability report or scalability test, is that it provides us exact information which part of the system requires improvement to deal with the future performance. So it's not because, as I explained at the beginning, the continuous trading is covering a couple of functionalities. So, for example, if we improve the measure, we need to also make sure then the trades can be translated into the information which is provided to shipping agents and so on. So that's quite important. Now, the last scalability report is clearly indicating that if the trading continues in the way as it is right now, we are already at the limits, which implies that we need to more focus on the performance optimization, so implementation of further improvements and extensions. The main driver why this is happening, I think, is clear to everybody. The trajectory of the increase of all the transactions is, I would say, rather exponential, which is driven by the fact that still more and more parties are using robotic trading, and that's quite visible in the system. If we look on the history and how to translate it into the future, which is important for the scalability, I think there are very interesting data that we compare how the processing has changed since 21 to 24. And this is a very good period because the type of products and contracts which have been used at that time is very similar. So we can see that even if we create a ratio, and I'm not talking about absolute values, because in absolute values there is a huge increase. But also when we talk about the ratios, we see that, for example, order to transaction or to trade ratio has increased from 15 to 25. And if we make the same comparison for between orders and the traded volumes, then we get from the factor 10 to 25. So that somehow indicates that the more we go in the future, the more power of the system is used, not leading in the execution, meaning in the achievement of the transaction or volume. So it's just used to simulate a certain situation in the market, but in the end, the trade is not achieved. Okay, so if we go into some details, so we can move to the next slide, how they translate. So here we are trying to follow up on the basic indicators, which are trades and orders and a ratio of the trades of orders. But in principle, we are following up on many other key performance indicators, which are of the technical nature, like the speed of the interfaces, speed of the matching and latencies and other details. But these are, let's say, the technical, not important here. So we can see the trend. So as I explained, the trend is a kind of exponential. That implies that in order to be ready for next period, we need to introduce a very good load management and be very careful about it. The chart on the right side shows the years, the basis, which is year 24, and then simulation for 25, 26, and 27. And also in comparison with two execution, one for the long run and one for the short run. These are the triangles which are marked as EPT. the strange numbers after EPT means number of orders in the peaks and in a 1 second peak and 5 second peak. So it provides, let's say, different shape within the test. And there we can see that with the version that we have already now in the operation, the peaks for the audit transactions, for example, is now about 37 millions. So it's quite high, but with the exponential growth, this may be, or it's not a problem to reach it if the proper load management is not imposed. The same applies for the trades. So what that to us, what we need to do for the future. For the future is clear, we need to improve a little bit more, or maybe more than just a little bit. So our ambition with the next release, which is expected to be delivered in the operation, would be to go to 50 million plus order transactions. And with that, this is not the only indicator. With that, we want to, of course, improve the number of trades which can be created. We also need to improve peaks and number of order transactions which are processed within the peaks. So many other parameters. But the basic message is we need to improve and we need to grow. And that's what is expected to be delivered in Q2 26. We are also looking a little bit more in the future because we have a roadmap for performance improvement. So this is not what we want to end with, and we want to grow more. Maybe just a summary with this will be planned for Q2 26. This implies that we can somehow create a generic statement here. So we've increased the performance in terms of order transaction since the start of the operation of continuous trading 500 times. So it's quite significant. But indeed, with the robotic trading on the market, we need to do more to create relevant opportunities for all market participants to apply their strategies. So that's from my side as far as the scalability report is concerned, and I think we can move to the another part, which are corrective measures.
Thank you, Vladimir and Chiara. Maybe before that, a quick look at the Slido to see if there were some other questions that you might have thought about while listening about the scalability report.
Mm-hmm. Yes, latency issues in XBit, that's a very relevant question, and that goes down to the question of the load management. So since a certain period, we are looking more in details in load management. This will be addressed in the corrective measures. We are applying now a hybrid model for corrective measures. And it means that we should simply stay away from the limits. There are also some technical clarification if we can improve that. We know that this will be substantially improved with release 5.0, but the corrective measures should ease up the situation at least prior we get to the release 5.0.
Thank you, Vladimir. Any other questions that might come to your mind now? For the question from Simon, we will take it up also via email. I already see the question in the mailbox, so we'll get back to that one in the Q&A as mentioned. But then if there are no...
I think the common point between the auction presentation of Chiara, the continuous presentation of Vladimir, is that NIMOs and TSOs are basically right now on top of things, on anticipating This based on scalability studies, anticipating the right adequacy between the level of performance of central platforms versus the market appetite or usage of products in all time frames. This is a very complex exercise because we need to be accurate, first of all, into the analysis, and we need to constantly scale up, obviously, on the platforms. Some of them have some limits, be it on short, on mid-term or long-term. We get a plan. This is also the message from TSOs and NIMOs. Let me highlight this 2025, 6, and 7, already decided and ongoing implementations. So the roadmap is already settled for months now for the short term, and we are now building the mid and long term. This is a message we are bringing here. We are not saying that we are restricting whatsoever drastically on short term. We will come to the topic of the corrective measures because they are linked. We first try to scale up. This is our message.
Good, thank you, Pierre. Then maybe we can move to the corrective measures, starting with the STAC side.
Yeah, here I am. So just as very fast introduction on the topic of corrective measure. These once again are done in compliance with what is inside the algorithm methodology. These corrective measures are instruments which are provided by the algorithm methodology in order to face the so-called anticipated performance degradation, or in case we experience or foresee in production performance issues. In this case, what is stated in the algorithm methodology is that we could limit specific products or the usage, or limit specific algorithm requirement or the usage in case they are at the root cause of this performance degradation. NIMOs and TSOs took this opportunity, the go live of 15 minutes MTU, to list a first step of possible corrective measure. We should be there in order to be prepared, and this is something that is quite in line. We are scaling up for sure the scalability of our systems, but we should also be prepared in case of some issue will happen. For what it has been said up to now, at least for the STAC part and the IDAS part, we do not expect issue based on the scalability results, but it's important to also be prepared in case any issue would pop up. So for this reason, NIMOs and TSOs listed the first short list of possible corrective measures for STAC, and this was communicated also via public communication in the NIMO committee and then so website. And in this section, we would just give you some more insight on the concept of corrective measure, and then how the different market segments would apply them. So starting from the process here, let me stress that these are last resort intervention. As we will see, we have also other possible measures less intrusive that do not impact the market participants' behavior and are mainly related to the internal parameter of the algorithm. Essentially, this is done for STAC. But in general, these corrective measures are last resort measures that should last for a very specific time window. So they are interim measures. Starting from the detection of any trigger of performance degradation, NIMOs and TSO would carry out a careful analysis in order to understand the causes and to identify possible solutions. And in case these possible solutions are identified in corrective measure, from the MCCG is required, and the corrective measure would be activated via an RSC. Starting from this decision point in time, this will be the activation of corrective measure will be communicated at least 7 days in advance with respect to the entry into force, both to NRAs, ACER, and to market participants. And then, as I said, this is an interim solution, so this should last for a maximum time period of 8 months, in order to give time to NIMOS and TSO to understand how is it, if and how is possible to restore the performance level without the corrective measure in place. Then, in more detail regarding to SDAC, then I will leave the floor to Vladimir for the seed part. But once again, what do we look for identifying any performance degradation in SDAC? Of course, we look at the time to resolution. We identify 2 possible monitoring processes. One, we call it slow trend monitoring, because this is the one which is prescribed by the algorithm methodology and essentially looks at the average time to resolution of the previous month observed in the market. This is what will be done in compliance with the Article 12 of our algorithm methodology, but it could not be enough in case we have a rapid trend of performance degradation. So in case we do not have entire months to wait, we just propose a rapid trend metric in order to identify this performance degradation. And we have 2 possible cases. The case 1, in which the time to resolution exceed the 85% of the allocated calculation time for 3 days in the last 7 days, or the case 2, in which the time to resolution exceed the 150% of the allocated calculation time for 2 days in the last 7 days. So if case 1 or case 2 happen in production, at that point, we start triggering the evaluation for the possible application of corrective measures. So this means that in case we observe performance degradation according to case 1 or 2, this doesn't mean that we apply the corrective measure. We start with an assessment in order to see the causes and the possible mitigation. And in case these mitigation are not enough, we will pass to the proposal of application of corrective measure. And also in this case, this is not automatic, because we should have a specific decision of MCCG on that. And so looking at this process, this is the next slide. After the triggering the events, so whenever the case 1 or case 2 are encountered in production, the technical groups of NIMOS and TSOs will start the investigation in the next working day, and based on all the monitoring data in their process. So not only the time to resolution, but also the usages and the data on requirements. Then these technical groups will come out with a final recommendation from the MCCG, which will decide if or not apply this corrective measure, and the approval of the dedicated RSC is expected in order to apply the corrective measure. In this point in time, the market participants and rate and data will be made aware of the activation of this corrective measure will be communicated, and as I said before, at least 1 week before it's go live. And this application of corrective measure should last for a maximum of 8 months. After these 8 months, either the NIMOS and TSOs found the solution to restore the performance without the corrective measure in place, or we should start amending the algorithm methodology and the SDAC and SID products methodology. Once again, let me stress that there is nothing automatic here. Only the monitoring is automatic, but any activation of corrective measure will pass through an assessment and then a specific decision that will be communicated with the at least 1 week in advance before the activation of corrective measure. In the next slide, we go in the, let's say, more detail on what do we mean by corrective measure for at this stage in time. But let me stress something that I said also before, that these corrective measures are a last resort measure, because before trying to solve the issue via corrective measure. We have also in our hands the so-called mitigation measures, which are essentially measures which involves algorithm configuration, algorithm parameter, algorithm tolerances, which are something which are not seen from the outside and do not impact the action on the market of the market participants for sure. And in order to face any performance degradation, NIMO TSO will start looking first of all to this mitigation measure, and only in case these mitigation measures are not enough in order to solve the problem, we will start looking into our list of corrective measures. And for this first, let's say, part, after the go live of 15 minutes MTU, we have identified 3 possible corrective measures. The first one is to reduce the overall product of usages down to the scalability study upper limit. This is something that is connected to what we said before. We said before that for each year, we projected into the future the expected scalability of the algorithm into the year +3 via simulation. We simulate the behavior of the algorithm based on the expected usages of the algorithm. So this limit of is the usage which have been simulated in the year +3 simulation each year. So for this year to come, this upper limit is the usages of product requirement simulated in the 2028 scenario. Then next year it will be updated, and so on and so forth. Another possible corrective measure that maybe is more drastic is the complete removal of linked blocks and exclusive group orders. And coming to TSO's corrective measure, we have the removal of ramping from HVDC line set. This is the first list of possible corrective measure. More can come in the future, also due to the experience that we get in this new environment of 15 minutes MTU. Let me stress just something that I already said before. We do not expect them. You saw our scalability results, but these are there in order to be ready also for not foreseeing, let's say, events. That's it from my side. And then I would leave the floor to Vladimir for the continuous part.
Perhaps a closing word on this auction part, if you allow me.
Yeah.
Vladimir, thanks a lot, Chiara. What we highlighted already, and this is still very much true for the continuous part, what that Vladimir will describe, is that analysis is key. TSOs and NIMOs will always conduct an analysis before taking any decision. The why is absolutely crystal clear. The measure has to be targeted and proportionate. It is not intentions of NIMOs TSOs to restrict whatsoever the market if it's not necessary. We are trying to avoid that. The first pillar of activities is the one we already used to make the 15 minutes go live a success, is to scale up the platform. So we are here describing this last resort measure, this insurance to get prepared to the worst. Analysis and target are clearly one of the pillars of our behavior in this case. Another one will be communication. You saw that the lead time will be at a minimum of 1 week before a decision is taken and communicated and the entry into force of these potential corrective measures. We are not acting from one day to another, so it will be always a clear communication on what would be applied, product, where, and so on, features, requirements. You will not be taken by surprise. So we wanted to make that clear. This topic was discussed in the past, can bring anxiety, but we have to get prepared for the common good of the market functioning. And this is really our spirit amongst NIMOs and TSOs. We need to have this discussion. We need to avoid to apply those. This is really our spirit. And everything that I said, of course, is valid as well for auctions or continuous. So please, Vladimir, dive into the details on intraday continuous corrective measures, and then we will discuss the presentations from member associations before we go to Q&A.
Thank you, Pierre. Thank you very much. So I have an easy position here because after Chiara's and Pierre's speech, the principles are same, so I don't need to repeat it. I may just focus on the detail. Here, in continuous trading, we are a little bit less lucky than in IDAS and in JHATS because as there was already this question about the latency, so that indicates that the time to apply potential corrective measure may be closer in SIDC than in other tradings. But let's start with the way how we look into the future. So I already indicated that we have certain limits and then we are planning to deploy release 5.0 in Q2 26. We are, or the roadmap on performance improvement goes further. We have certain ambitions when we will deploy release 5.1, which will deploy additional improvements to go even further. Our ambition is to reach 100 million order transaction at that point of time. But it's all based on the also situation in the operation. And this is very interesting because, for example, we've made certain projections in the past. There were certain expectations, and maybe just to demonstrate the situation, I already gave an example when discussing the scalability report, how system was or a certain indicator has changed between 21 and 24. And we can also observe certain behavior during the very short period. So indeed, introduction of 15 minutes MTU in majority of the areas now taking away wave 6 has certain impact, but it was expected, it was planned for. And for example, somewhere in July, we are observing the number of order transactions in the operation on average around 28,000, barely reaching the peaks, 29 million order transactions per day. And then simply within 6 weeks, it went up almost by 9 million order transactions per day. So a huge jump in a very short time, which if we take the curve and all the simulation was really something which was seen for the first time. And we need to deal with that. So as I mentioned, there is a load management to deal with that. And that also means that in certain situation, we need to consider the approach, how to potentially apply corrective measures. So from SID perspective, we have two basic approaches, short-term corrective measures. This is something that we need to apply already immediately, and something where we look a little bit more in the future. The topic of the corrective measures is under discussion for quite a significant period of time, and all this discussion also led to the improvement of the roadmap on performance improvement, and many things have been delivered. But still, it may mean that market may go faster in terms of load, which is provided to our central system. So we need to react to it. Currently now, we are in the situation that we are applying a so-called hybrid model for load management for some kind we can understand as a kind of corrective measures. What that means? That means that there are certain unharmonized approaches across NEMOs which are applied to manage the load in the way that system provides the responses as expected. So with that, I mean that there are some NEMOs which may apply, let's say, some principles to submit a certain number of order transactions per certain time or per day, or the other are looking into the ratio between order transactions and trades, and there are different models, but the goal is the same. The goal is to make sure that the trading is smooth and that it can fulfill its function. This is quite important. Maybe when I mentioned the jump in summer this year, it's also interesting to see that even since there was this jump and we are trying to keep the operation at a certain level, even with the increase of the transaction, we still see almost the same number of trades. So again, there was a huge jump, which generated a lot of, or took a lot of power from the system. But in the end, the contribution to the market is quite limited. So this is something to keep in mind. Now, when we look to the short-term or middle-term and long-term corrective measures, there is something that is important to be presented already today. So we have many corrective measures which are under discussion. If I may ask to go to the next slide. There are different measures which are at a different status of maturity. What I mean by that is that for some measures, we need to implement certain things. For some measures, we need to just create the scenario and to create, let's say, test conditions which will deliver relevant information. So there is a set of the measures which are not listed here because prior we start open discussion on those measures, we need to understand and we need to be sure that there is a contribution, and we also need to be sure in which part of the process the contribution is most significant. So we don't want to create a fuss in the market until we are pretty much sure. On one hand, there is one measure which we would like to test with you, and we need your assistance because the only way, after all the analysis which we've made, so the only way how to test it is to apply some testing period in the operation. And this is the measure which is labeled as a limitation of order book depth. Currently, the order book depth is set to 100. This has been there for quite long period of time, but those who've been trading here for a very long period may remember that at the beginning it was limited. It was only, I think, 31, if I recall correctly. So since then it was kind of extended. Today, we consider that we are in a little bit different situation that at the beginning of operation of continuous trading. So market is quite robust. There is huge liquidity, and therefore we consider that making this change, which indeed may have a certain impact on you, but we consider that it should not have a principal impact on the market participants. Time-wise, we expect to decrease the number in the limitation of order book depth from the 1st of December, so applicable for the contract starting from the 1st of December. We've already, we are already in the process to collect necessary key performance indicator to see the impact and see the benefits. And it is expected that this change, and this is still to be validated and discussed among the specialists and reflect all the analysis and the results, but it is expected that it may take 2 months to have it in market, maybe longer, just to really collect necessary information to compare current performance of the system and performance of the system under this limitation, which is foreseen here. There will be definitely more details which will be provided at a certain point of time. As indicated, there is always some lead time to inform the market participants, so it will be definitely 1 week, but we intend to provide more details more in advance. But here we would kindly ask for your cooperation and participation, by all participation. That will be by default, but just to explain the reasoning, we consider that this optimization may ease up the computing power of the system, and with that create more space in the processing of all the transactions. So that's the key assumption that we want to confirm, and the only chance how to do it is directly in the operation. So I think that would be all from continuous market as far as the corrective measures are concerned, so we can jump into the questions. If there are any.
Maybe first, then, as Pierre indicated, to move through the slides for market parties, if Sally would like to channel the messaging there, and then we can go for the Q&A.
Yes, thank you very much. Yes, so we have a few slides, and thank you for the presentation as well. We understand that corrective measure would be very last resort, and there would be also, of course, like investigation before implementing them, and also lead time and time given to market participants to understand when they will be activated. However, we really wanted to stress that SDAC and SIDC corrective measures and like the measures that some were presented may be really not advisable or appropriate for market participants. And the reason is a bit, if we take back a bit the context of the 15-minute MTU implementation, which the goal is to accommodate for a more flexible system. But using 15-minute MTU order highly actually exacerbates the risk that the clear volumes are not technically feasible, which may increase the need for intraday adjustment, which is actually in contradiction with the objective. On the right, you can see that there was a multiplication of, for example, discharging periods and combination possible. So there are like technical constraints that are also very present there for market participants that only can be respected through the usage of smart block products, which are like linked blocks, exclusive blocks, flexible blocks, which may be removed if corrective measures are implemented. So on the next slide, I don't know if you can switch. Yes, we really wanted to stress that although we understand it's a last resort situation, and it is also, of course, for the sake of a working environment, removing linked block and exclusive group orders will be very disruptive and a source of very strong de-optimization and not a viable option for market participants. So we want to urge the NEMOs to invest in the algorithm capability to increase the availability of smart block orders and foresee new products, which will enable flexibility to be properly represented. We also want that the limits of smart blocks order to be harmonized and accessible to market participants. The impacts will be unequal on the market participants of different NEMOs if there are different limits. And also, of course, we really want that market participants will be consulted to discuss next steps and possible solutions. As I was highlighting, this would be very important for market participants to be informed on those points. Thank you very much. And I think there are also questions of market participants maybe in the chat as well. I don't know if they're related.
Yeah, I think that goes to me. This is taken care of by several steps. So first of all, we implemented for monitoring. So we'll get weekly information on the details and behavior of the system, which should be translated into daily information, providing not just info on the other transactions, but also on some other technical details, speed and latencies and things like that. And simply this is evaluated on a weekly basis right now, and we are trying to apply this hybrid model, which means that for certain NEMOs there are certain indicator to stick to, meaning, for example, all the transactions per trades ratio or some other ratio, some other applications. So this is what we are trying to apply on individual level, but with a common goal to keep within this limit. So we are very close to these limits, which are listed in the screen. And then simply we agree to make a little bit stronger load management. So we are aware of the technical limits, and indeed we cannot go beyond them. And in the meantime, we're working on the increase of those limits.
So to complement as well what Vladimir replied on behalf of NIMO's TSOs, there are three nature of improvements we are contemplating, not only intraday continuous time frame, auction as well. It's hardware, software, and the way we use the platform. We include here requirements, usage of products, loads, and so on. We have measures on the three pillars I just mentioned, on this short, mid, and long term. And for the specific case of XBit, there is a plan from 2025 to 7. The long term is still being discussed, but there is clearly a willingness or a push from NIMOs and TSOs to drastically scale up on the mid and long term. This is our ambition. What we achieved in the auction framework to make this 15 minutes go live a possibility shall now be achieved for the intraday continuous platform. Vladimir, are you able to answer this one, or we take it for the Q&A? Please advise.
I think we just discussed this one.
Oh yeah.
Okay.
Yeah, sorry.
One.
Well, can you please explain what you mean by reaches the limit? Because n-1 is a different problem than actually the limit of the system. There are two different problems. So why are they combined here? The backup solution is as good as the main solution, so there's no problem in that sense. So backup solution is always up and running.
Yeah, we might mix here indeed the failover capabilities of the XBit platform. One side is able to take over from the other in case of issues. But it's a different item here we are tackling through the corrective measures and load management. As Andreas stated, we have two similar productive instances in production. So if one has performance issues, the other one is strictly similar. We do not have different performance capabilities between several instances in production. We basically put what we have as a best solution in prod constantly. And this is the one we are improving. So we are mostly targeting here the infrastructure scale up or the usage mitigation or requirements mitigation. But either we missed the question or we take it differently in the Q&A.
Yeah, still, if our answer is not correct today, I think we definitely covered the second part, and -1 is still question mark for me. If this is meant to the failover scenario or not. Definitely there is a failover scenario as explained. So
okay, we can take a longer question, but Lorenzo, please dive in. You had your hand raised.
Yes, thank you very much. Just to complement on these corrective measures, I think we truly appreciate the investment that is going both in Euphemia and XBit. It seems that 2026 will be a big year for investment, and we appreciate that there was one of our main messages today, right, on our presentation, investing in the capability of the algorithm. So this is great. What we want to convey today, I think one of the main messages on smart block orders was really to discuss with market participants the next steps, especially on this measure. We understand there is an Acer methodologies, and NIMOs can, of course, limit the usage of certain products. The fact is that really the 7 days notice period is a bit tight. So if like we reach the limit and it looks promising again from your investment plans, let's say in 2026, but if we reach the limit and then we receive a message 7 days before, let's say, yeah, smart blocks will be removed as of next week. Good luck with optimizing your assets. I'm a bit emphasizing, but just to really make sure that this measure needs to be discussed further with market participants. I think that was a bit of the message, and we're of course happy to discuss bilateral review via Energy Traders Europe and Euroelectric on how we can take this forward. Thanks.
It is well noted, Lorenzo, and Nimos will take it up in the community on this smart blocks. We wanted to present to you today and to the audience what we are doing as part of the yearly exercise. We need to see it coming, the market trends, so the so-called scalability reports. But we also needed to present the reactive measures in case it is needed. Again, it's an insurance. We cannot be naked neither on the side of NEMOs and TSOs. We need a working environment. This is just a must. And yes, there are last results among the last results within the measures. So there will be some ranking. The most important point is that it needs to be targeted, accepted. So all these parameters within the equation are carefully taken into account by NEMOs and TSOs before we take actions. There is no silver bullet. It might even be a combination of measures, a reduction a bit of here or there. It is exactly what NEMOs and TSOs are testing as we speak, but point taken.
Yeah, from my side also to point out that here we presented the framework and the processes that will be used if something goes beyond the system limits, let's say. So we are ready for that, and we will take the necessary steps if and when that arises in order to have the minimum disruption to the market.
Thank you all. Perhaps now looking at the time to also still allow some time to collect questions offline or during the break. Perhaps we can now give it a few minutes and then reconvene after a bit of a refreshment at 55 to then continue with the exhibit incident, and then any questions that will come, we can always also cover them in the next Q&A session.
Okay, so we are 5 minutes behind schedules. It's quite okay. So we meet again at 10:55.
Exactly.
See you there.
See you.
All right, I hope you had a moment to refresh, and now we should reconvene back to continue with the agenda and starting now the second half with the some more information about the incident occurring on the 6th of September. We have with us Martin Stilwell, who will be presenting the next update.
Thank you. So good morning all. I'd like to provide a short summary on this market suspension that took place on the 6th of September 2025. On that day, there was a planned maintenance activity carried out on XBit data center as part of our vendor's infrastructure modernization program. The maintenance itself actually concluded in 2 hours from 7:30 to 9:30 approximately. And XBit systems were restarted without any immediate alarms. However, shortly after, market participants began reporting difficulties accessing the main trading interfaces, as well as LTS connections. It initially seemed to be a localized connectivity problem, but quickly revealed to be a widespread issue. And as a result, the market had to be suspended. The outage lasted an extra 8 hours, so therefore a total of 10, with full service only being restored at 17:30 and then market restarting just before 6 o'clock in the afternoon. Importantly, there was no data integration issues, meaning no trades or market records were lost or compromised, but the disruption to market operations was significant, as we know. This, after an extensive investigation, the root cause was identified on the side of our vendor. And it was a previously unknown bug in the firewall system software. During the failover process, which switched to backup systems, we noticed that the firewalls entered into a frozen mode, which actually seemed like it was functioning correctly, but in reality, they were silently blocking all types of connections. So there was no security risk in this, although the system stopped functioning. This made the problem extremely difficult for our vendor to detect the issue, but it was then recovered after several steps, including multiple firewall restarts, technical interventions, and eventually reverting to the primary firewall. Once this was done, connectivity was fully restored and normal operations could resume. To summarize, this incident did not lose any data. It was a major disruption of more than 8 hours of unexpected. The key takeaways, however, is that we have, or we with our vendor, will increase the robustness of monitoring. The actual bug has been identified. The fixes plan to be implemented this quarter, and only due to a specific changes which occurred in the data center, which will not happen until this actual fix is implemented. And that is it. Any open questions?
Not so far on the incident itself, but maybe still staying within the XBit. There was one question on the depth of the market. I'm not sure if it's for you, Martin, or for someone else among the presenters.
I think it is clearly linked to the order book depth reduction that Vladimir presented a few minutes ago. We had this 100 to 50 reduction proposal, but now the member is asking what about the volume? What does it mean in megawatt? I think it is something we can take. We don't have the answer, I guess, today, so we can take it for the Q&A. We log it. Is it okay with you, Vladimir?
Yeah, well, I think it pretty much depends on the status. If this is meant this way, it pretty much depends on the status of the order book, because there may be, volume, high volume, which is in the high 50 orders, or the other way around. If this is meant this way, if the question goes in the either direction, as I think it was raised when we discussed the corrective measures, so it also may go into the comparison in terms of megawatts or megawatt hours, depending the development in the market and things like that. So there I would somehow indicate that from 21 to 24, the trading with regard to the megawatt hours doubled. So there's a positive trend. On the other hand, when looking into a number of submitted order transactions, these have increased 7 times in that period, which implies that it is a little bit like mining the bitcoins. To add a few megawatts, we need to steal more and more power to ensure that. So if this was meant in the direction, then there is a clear trend that the more we go in the future to ensure that you can trade more megawatt or megawatt hours in the market, there is constantly higher and higher demand on performance to achieve that. So I don't know if the question was meant in the first direction or the second direction. So before we address it after the call, I think we would need to have more detailed explanation what exactly the Berto is aiming at.
Exactly. Please, Berto, make the question more clear on what exactly you need to understand and what information you need from us. We'll take the question and we'll come back.
There is one more question coming in.
Yeah.
I can take it up. It's more addressed to the NEMOs. So if the question is related to, I think we come back to the incident, and not to the corrective measures this time. Please advise if it is not the case. Please go through your NEMO, basically, or the membership, and express your impact that you might have experienced on this day, beginning of September. And your NEMO will channel this. Of course, the NEMOs and TSOs are, as we speak, fostering this monitoring of KPIs, penalties, and so on with the provider. If you have something to express, please go with your individual NEMO or NEMOs.
Yes, so these issues are addressed at the national level. So there's not much that we can say here at this forum because this is more of a national issue, let's say.
I think, Vladimir, you get your complement questions from Berto on the screen now. I think Berto might be afraid that we are basically defining the order book depth in terms of orders numbers independently from the volumes. These 50 orders could represent a lot of megawatts or very little volumes. This is a bit of the question from Berto. What do you answer to that? We don't have this megawatt metric, right? It's a number that we are targeting.
It's a number, and it depends on the situation or on the market. So, of course, if I remember well, the minimum step for megawatt is as shown in the screen. So if all the steps are used, and then we have limit 50, then it will create space for 50 megawatt hours if we go just 1/10 of megawatt. Indeed. But that depends on the situation. So if there are orders which go just 1 megawatt to 2, 3, and 4, so it really depends what is the current situation in the market and how this is translated to the concrete market area, because in one market area you can see a different situation from the other market area depending on the available capacities on the borders.
Thank you. And perhaps if there are no other questions on what was presented by Martin, we could move to the SDAC fallback improvements.
Yes, so please see this presentation as a very clear and logical follow-up of our discussions we had in June, where NEMOs and TSOs presented the ongoing work, the different work streams, the cooperation they initiated with Acer, the measure taken after incident of 2024, and so on. The topic today is to report what was done already today by NEMOs, TSOs, what is in the pipe of the measures being now, as we speak, implemented, and what is still under analysis by NEMOs and TSOs. So we will go through all these different work streams and so on. But we will start first with our the feedback from our operational committee, because we have already accomplished one of the items. It is very much linked to an educational paper, the fallback manual that we announced already in June, and we really wanted to make it public before the event. It's done. Luisa, are you connected to guide us through what was achieved?
Yes, I'm here. Good morning, everyone. So indeed, I'm happy to be able to share a few words with you on this important deliverable that was made available last month for everyone, for the entire public, which is the fallback manual. You know very well when we talk about operational resilience, it's not only about reducing the risk of decoupling, but it's also coping better and better if decoupling happens. And just to put some things in perspective, decoupling is quite rare actually in the stack world, let's say. We've never had a full decoupling yet, and hopefully not in the near future, ever since the launch of market coupling, 2014. And we had some cases of partial decoupling, the last ones being in summer last year. So, of course, even if we do our best to reduce the risk of decoupling, and we will see in the next slides, my colleagues will present what we can assess in order to reduce even more the risk. We cannot actually not work on training better on how to deal with the decoupling if it happens, because yeah, the risk is still there. So many parties interconnected, so many systems. It's not a foolproof process, even if we do our best to secure it. And I think the results from the past year is showing that we do as best as we can, both NEMOs and TSOs, to ensure that decoupling is not occurring. However, when it is occurring, and this is what we saw last year, it was definitely clear that there is some unclarity on the process and some unoptimized, let's say, usage of the process of decoupling, which created issues, for instance, in an unoptimal usage of shadow auctions and things like that. So for this, we have several things that we are doing. So for instance, on NEMOs and TSO side, we are constantly training to deal with decoupling, and we are also constantly improving our operational procedures on how to perform better when decoupling happens. Again, being such a rare event, it's important that we are constantly training. Otherwise, it's natural that we lose track and we lose the facility of dealing with this. On market participant side, it was stressed that this is also a strong need because, of course, again, being a rare event, things are forgotten. So, and the process was never laid down in such a way so that it's fully transparent for everyone what the process is. So this was something indeed that was expected, and we had to do it in quite some time. And I'm super happy we managed finally to publish this document, which is called Stack Fallback Manual. It's published on NSOE and NEMO committee websites. There was a communication being sent out to everyone about this, and there were some LinkedIn posts as well. If you missed the communication or the links, you have them here on the slide. It's called Fallback Manual, but just be aware that it also includes some important slides about delay in market coupling results publication. So that basically it's like a complete guide, I would say, for any kind of incidents that can happen, not only decoupling. And it's written oriented towards market participants, so it's rather visual. There is not a lot of text, so we didn't really put the procedures themselves that we have, but rather a summary of the existing procedures and timings. You will find there complete timeline for each of the incident situation, and very important, you have the all the market messages, all the incident messages that you will receive for each decoupling or each incident situation. Both the text of the message, the code of the message, and the time when the message will be sent. So it's really important so that operators, and your traders know exactly what to expect. When is the next message that will come up if results are still not available, for instance? So, and you also have the very important information about the fallback allocation measure for each interconnector that is being decoupled, so that it's clear where there are shadow auctions, where there is regional coupling, where there is intraday trade applicable, and so on. So this really is supposed to be used as a material that you can use internally for training of your own operators. Of course, it can be used during an incident itself. Again, it's really like a summary document, so you can go directly to the slide that concerns the incident and use it, but I would strongly recommend also using it for training purposes ahead of the incident. And take opportunity to say that we will have the annual training session with market participants in 1 month almost. So I think it's 19th of November actually. And so we will test a full decoupling in that session. Everyone is welcome to join. We will simulate everything from shadow auctions up until the nomination process. You will receive the usual market messages. There will be a full package of information being sent out. The timings will differ a little bit on production because we want to avoid colliding with the stack production session. So testing will start right after, but you will have an important slide in the package which will show you the production timing compared to the test timing so that you can always relate to the fallback manual. And yeah, it's super, for me, it's a super good opportunity for everyone to use the fallback manual in this training session with market participants so that you get used to reading it, and so that we also get feedback, because it's super important that we also receive feedback on what was delivered. If there are some needs that are not covered, we would like to, of course, improve. There is just one thing I would like still to say about the fallback manual. As you know very well, we have what we call the central part of the process, so everything that regulates the stock auction as long as there is still a coupling in place. And then there are regional or local specificities for the area that is decoupled. And for that, we have, you will see in the document, there are regional annexes which go into what happens after decoupling for each of the related areas. For that, because we really wanted to publish this document ahead of the 15 MTU go live, so that you also already have there the timings of the new timings, because you know the timings have changed. So we had a quite strict deadline to make it available. Only 2 regional annexes were ready at the time. It was the Nordics and I think Southwestern Europe. And the remaining regions like core, Polish, and I think it's Italian border region will be published normally before the training session with market participants. We aim to have it either end of October or beginning of November, so that you have it ahead for the member testing. And normally that would assume that at that point in time we have a complete set of information for you published. That would be it.
Luisa. Thank you, Luisa. So we give you rendezvous to the market participants, mainly here in this audience, on the 19th of November. It's a Wednesday. Please get organized to join this training session and read the manual before. Luisa, can you also shed some light on one of the points that TSOs and NIMOs are highlighting in the manual? It's all about the improvement into the messages that are being sent to market participants in case of fallback applications. We also had one measure here implemented.
Yes, indeed. I mean, in the beginning of the year, we have implemented already some clarifications in the messages. For instance, we have added a reference to the shadow auctions run by JAO. We have, with 15 MTU go live, we've also updated the coding of the messages. For instance, adding stock in front of each code. It seems not a big deal, but it's important because now we have more auctions per day, so clarity is important. And we've also improved on display the fallback allocation solution per interconnector in case of decoupling. Of course, most of these are not visible for market participants yet because we didn't have a partial decoupling since we have improved the messages. But yeah, content-wise, we have already made the required changes. And of course, now that the fallback manual is also published, if there is any further, I don't know, improvement that would be required, we are happy to take recommendations or suggestions. But yeah, bear in mind that in case of incident message, we want to be concise and clear because no one has a lot of time to read lengthy messages when incident happens. So we try to give the compact and most essential information there. That you have the full content in the fallback manual. If there is anything, please come back to us.
Thank you. And by the way, the likelihood to get discrepancies in the messages sent by different stakeholders was drastically reduced because a central source of information will be drafting and sending. After that, individual parties will use this source of information. So this 2024 learning was very much implemented already in those messages. So 19th of November, and please get knowledge on the manual before. This is the message. If we continue down this road to description on the fallback improvement into the day-ahead time frame, again, everything we are stating here is a fallback to the SDAC in case of decoupling situations. You see here the two first lines, which are the implemented measures. So the one we just mentioned, publication of a manual, that is a living document. We are not saying it's set in stone because every kind of improvement of evolutions that we are potentially implementing will be reflected in this manual. And the operational messages we just mentioned. Then the 6 work streams we elaborated on quite extensively in June during the MCCG are still a living topic amongst NIMOs and TSOs in cooperation with ASN and NRAs. We have dedicated workshop on that, and this is what we want to report today to you. There are some measures, of course, where NIMOs are the primary doer, on some others TSOs can act on solutions. So it really depends on which part of the process we are contemplating. As the spirit of the discussions is still the same. We want to drastically reduce the likelihood of incident to occur. And if they still materialize, we want to drastically reduce the impact of those measures on the market. So the mitigation of impact. These are the two pillars of these 6 work streams. We will have some experts diving into the discussion in a few minutes. I start with the work stream number 1. We are talking here about the measure presented in Q2 and consisting in preventing the decoupling to happen, especially the one due to issues relying in order books process, be it closure, submission, and so on. Decoupling of the SDAC. These are the events we experienced in 2024, for example. These are still under analysis for the local trading solution robustness. NIMOs are very much already targeting this mid and long-term measures. Short-term improvement were already implemented. Still, one of the measures we discussed back in June as part of this deck was to consider a partial or incomplete snapshot of the order book to be taken by the ZAC algorithm as part of the market coupling. So we avoid the decoupling to happen. Drawback are that order book is not complete and taken before 12 o'clock. And we do not know if the results could be really integrated, if nominations of financial settlement could be done safely afterwards. As a conclusions, NIMOs concluded that it is basically having drawbacks, weighting a bit more than the advantages, and are not recommending this solution. So they are now full steam ahead on making this robustness of the process, of part of the process of market coupling, increased. This is what we are working on as we speak.
So work stream 2, Yeah. So it's basically more, let's say, dedicated to the TSOs. So it's relaxing the 1530 nomination deadline. So, and pushing it back to 1600. And there was an inside NSOE discussion regarding how this could be implemented. And there was a detailed process review. And in the initial phase, no contradictions to current procedures have been found. Yet the process is way too complicated, and it has to also be addressed on the national level and the local level before this can be implemented, because the repercussions are quite severe. So although yet there's no problem to this being postponed to 1600, sorry, there's still work to be done in order to make sure that this can be implemented throughout Europe. So yes, and regarding workstream 3, we have reviewed if there is further optimizations of operational procedures to be done, and we have found out that there are some minutes here and there that we can work with, but overall this will not make any big changes to the capability of reducing the possibility of decoupling. So we don't see here in this area to have a major, let's say, breakthrough, and to be able to continue forward in the future. And I don't know, Pierre, you want to continue with that? Continue trading, or okay?
Go ahead, please go ahead. I think Gergo anyway has some additional slide on workstream 2 and 4 later on, but please go ahead.
Okay, so NEMOS and TSOs presented to us a first analysis of how this new process replacing shadow auctions could work. Of course, it's a very complicated issue. Analysis is still ongoing, design is still ongoing, and the prospects and the, let's say, of this are further investigated due to the wide impact they have, because day-ahead market is where most of the trades could take place. So moving them to a completely different infrastructure and market structure is not straightforward, and there are many issues regarding market, regarding operating issues, regarding infrastructure that has to be addressed before moving there. All this is currently under investigation, and we'll come to you back as soon as we have some concrete information to give back to you.
Yes, we will come back in a minute to this specific item. We have one dedicated slide as well from TSOs. Workstream number 5, it is the one as well that we debated in June. It is related to the target get a single price within bidding zones in case of a subset of NEMOs are decoupled from the SDSC. This single price will be the stack price because there is no full decoupling. The SDSC is running. Basically, we have a clearing price for all time units in all bidding zone. And these are in the core region. This is where we have this, let's say, or multi-NEMO arrangement or a tight decoupling deadlines preventing us to have some regional mechanism. We are here getting there. It is under implementation. This is the message we bring today. To get there, of course, the technical solutions are being implemented, and the last regulatory deliverable, which are the multi-NEMO arrangements, are being modified for a proposal to be submitted to a national NRAs. An approval process will start. So it is already decided in NEMO's TSO's community and under implementation since a few months now. It is now a question of time before it is light. We got the clear question from your associations on a potential lead time to is it days, weeks, or months? It's not days. It's definitely not years. We are not in full control on the NEMOs. Yes, we are implementing, but we need this clear wording to be finalized and approval process to be swift. So we will come back to you with when we have this visibility, basically. So principle is now agreed and under implementation. Workstream 6 is equivalent in terms of, meaning getting a single price within the bidding zone, but a bit different in terms of application, because we are now talking about full decoupling cases where SDSC is not successful. This SDAC auction was completely cancelled. No results were published. No price was computed for the bidding zones. Here, NEMOs and TSOs are investigating solutions to get a day-ahead reference price, again, single, per bidding zone and time unit. One of the way forward, and it echoes a bit the workstream 4 we just mentioned, will be to look into the subsequent market cascading, namely the intraday continuous, where the capacity could be released as an alternative to the failed SDSC. And there, a snapshot of price measurement and so on could be done to get a day-ahead reference price. This is still under investigation and analysis. So we had listed here a few impacts, be it performance, be it where exactly it could be applying, yes or no, we have a good reference price and so on, before we can bring this topic to a conclusion. So it is an alternative. 5 and 6 work streams have that in common, that we are looking for a single price per bidding zone. We need to be a bit more creative, of course, for workstream 6, because we cannot take the SDAC price. It does not exist. So we need to find another reference. This is what we are busy with. If Gergo is in the call, we can have or Andreas, I don't know who from TSOs can report on this workstream 4 and 6 especially.
Yeah,
and nomination deadlines.
Yeah, it's actually referred
Please
to the
go ahead.
workstream 2, and I was asked by the TSOs to indeed provide some short updates, basically adding a few more aspects that Andreas already presented. So basically, indeed, what was mentioned, the assessment is now ongoing mainly on local and national levels, because I think I can provide you some very short insights that the key process that is affected with these kind of nominations that we are speaking here is the one that is used or to create grid models in the TSO within the TSOs, which is then used for various processes from system security analysis to capacity calculation. And these processes are mainly done on national level first, and then merged into some common models on the pan-European level and regional levels. And to have these models properly prepared, we need good quality nominations on time, which is basically the essence of this overall question. And this is now analyzed by the TSOs, how they can accommodate such shifted nominations in their local processes. So that's a key aspect. And this is why it was stated that for the time being, no blocking position was identified yet, based on the assessment that were done mainly on the central level. But now the assessment is more on the local and national level, where potentially we also foresee that some involvement of the market parties in form of some consultation could be necessary also in the future to assess if this modified process is feasible. So that's what probably I can add next to what was already stated. And I also saw some question in the chat, so I try to answer quickly in written form, and then yeah, if there will be further, then I will answer in live as well.
I think you can do it already, orally. Go on this workstream 2. We had one specific question. I think the second one on the screen. If you can shed some light on the dependencies, basically, is one being the prerequisite or the other? Please
Yes,
clarify.
indeed. So that's why I already started to a little bit introduce what is happening in the TSO area with regards to these nominations. And the reason why it was identified that the shadow auctions should be replaced or removed in case we would like to shift the nomination deadline is because in the past incidents, TSOs experienced quite low quality nominations in these situations, which mean that TSOs had to take some extra efforts and time to basically put together all the relevant information, which was then correct, which is in such kind of stressful situation anyhow difficult. And in case we squeeze the timing even further, because the shifting of nomination deadline means that there would be less time for TSOs to do such measures, the decision or the proposal on the TSO side was that we can basically only move this nomination deadline if we get rid of this vehicle, this shadow auction vehicle, because it was not worked very well in such sense, meaning the quality in the past. So that's the reason why it is, bound together.
Okay, I can take the next one. So we are back to work stream 1. Why Nemo discarded basically the concept of preliminary or snapshot order book. So here the drawbacks were that at least the beauty of this process is to stay coupled. First of all, because one order book, be it incomplete, a snapshot is taken before the incident occurs, could be well ahead of 12 o'clock, we don't know. The drawbacks are that even if we are staying coupled, there is no magic. The IT infrastructure needs to be back online and up and running for this individual Nemo, meaning that when the market results are being computed by the SDSC algorithm, then the results need to be integrated. Of course, at an individual level, the portfolio allocation of volumes needs to take place, the nominations need to take place. If we don't have the guarantee, and we don't have the guarantee that the systems are up and running back around 1-2 p.m. before the full decoupling deadline, then we face the risks to transfer partial decoupling cases to full decoupling cases, because the Nemo will reject the market results, maintain potentially this rejection until the full decoupling deadline. But at this point of time, we have no possibility anymore to isolate the issue to this specific Nemo. The partial decoupling cannot be triggered anymore, and it will lead to a full decoupling. So the problem would have been aggregated. We stay coupled for an hour or two, but who knows if we are not getting a rejection of the results because this Nemo is still down at this point of time. This is a bit of the analysis that Nemos have conducted, concluding that full steam ahead needs to be put on fostering the process of this IT resiliency. It was too risky to proceed with taking another book while the systems are down. Next question from Sergio. So this is what we described in the last work streams. The target, in case of partial decoupling, will get one single price per bidding zone, and it will be the SDAC price in case we are contemplating here a partial decoupling process, and the SDAC is running. So the SDSC price is the reference price for any Nemo that might have been decoupled within the bidding zone. In case of full decoupling, so this workstream I just described is approved and under implementation. In case of full decoupling, the SDAC price does not exist, and still the Nemos and TSOs are now investigating alternative solutions, bringing a single reference price. It cannot be SDAC, but it should be single, and the reference price will be attributed to the day ahead. So in all decoupling cases, we can conclude that there will be a consistency in a way that there will be a single price. In case of partial decoupling, it will be even the SDAC price. Next question, will there be cases of different prices with different NIMOs in case of decoupling? In case of partial decoupling, as referred under the workstream we just described some minutes ago, no, when implemented, it will not be possible. This workstream 5 is ensuring a single price in case of partial decoupling. In case of full decoupling, it is the very same target again to get a single price. We just need to be a bit more creative because it cannot come from SDSE and we need another reference, obviously. SDSE failed in case of full decoupling. So when this workstream 5 and 6 will be implemented, there will be a single price. Workstream 5 partial decoupling are under implementation. Workstream 6 full decoupling are still under analysis by NIMOs and TSOs. This is where we are at. Question from Euroelectric. I think it was also part from your email from the associations. We can elaborate within the Q&A. I just described it orally on the why NIMOs had some very strong concerns how dangerous it can be to move from partial to full decoupling potentially, but we can elaborate, of course, within the Q&A document. Another question from Jérôme. So as a reminder, workstream 5 is all about getting a single reference price, the SDAC price, in case of partial decoupling. The target here is to go for a volume allocation. You also saw that through the package already in June. It's now decided. NIMOs are implementing it. There are two solutions. We can describe the high-level principles in the Q&A document when agreed by NIMOs TSOs, and you can also contact your individual NIMO. If you will have some requirements on this solution of matching, you can definitely go through your individual NIMO or write to MCCG conveners, and we will channel it through the relevant working groups. It is now mostly streamlined through the core region, because again, this is where we have a combination of multi-NIMOs and nomination deadlines and not allowing other processes. So these are the two options, MCCG's associations, and we will channel it in MCSE or individual NIMO.
Regarding workstream 2, low quality nominations basically mean that because the market, you want to reply to this? You have more specific answers?
Yeah, I hope at least that my information that I have on this is correct. So as far as I know, this means that due to the unbalanced nominations that the TSOs received at that point in time, it was difficult to align on the dedicated schedules on the borders, and especially at the end to set the right net positions for dedicated bidding zones, which is then used for the system operations. So these kind of problems that the TSOs had at that point in time, at least to my knowledge.
Yeah, basically, it's the market not operating correctly, and this making flows not happening that otherwise would have happened. So this is what we say with low quality nominations.
You're mute, Pierre.
Thank you, Gago. Last but not least, as a closing remark for the fallback, information is key, communication as well. So we started with the presentation of the manual. Of course, communication will be streamlined to make sure that awareness is raised in case of implementation is now having a clear go-live date, a decision is taken, entry into force, and so on. Of course, it will be the case nobody will be taken by surprise. There will be a clear announcement when we have a precise go live date, be it for workstream 1 to 6.
And also, just to add to what you said, we're going to inform through this forum in any developments regarding any workstream. So you will be anyway well informed of what is happening at any workstream.
So we'll elaborate in the fallback. But let's go back to the normal day, Andreas. Let's leave the fallback. What happens in the continuous market? Tell us more.
Yeah. So if I should start.
Yeah, the floor is yours.
Indeed, we already provided information in the last MCCGs about the shifting of intraday cross-zonal gate closure time from 60 minutes to 30 minutes. I don't think that we need to introduce the topic from the basics, so I would only provide you some updates on this topic. I think it's very good to have the go live date set, which is the 14th of January, which means the delivery day. So the trading can already start one day before with the shifted gate closure times. We also have a set of orders and of course TSOs that will change the gate closure time in that sense, which is listed on the slide. I think there's 2 points which is good to be highlighted. One is that on the Estonian-Finnish border, this 30-minute gate closure time is already implemented quite a few years ago. And also some very fresh news on the Lithuanian implementation that they foresee some delay, which is impacting their go-live date. This is still under assessment. What does it mean exactly? So I cannot provide further details yet. But it seems that they have to go live slightly later. It's also good to mention that the local developments are ongoing on the mainly on the TSO side because central assets are not really affected with this change. It's mainly setting some parameters on the central part. It's mainly on the local TSO side where the developments are currently ongoing, and we will test the overall process flow starting from next week on the central level as well. So to see if everything is on the right track with regards to this change. On the next slide, you can see some graphical overview where you can expect to have a 30-minute gate closure time. So these are the green areas where there is no derogation requested by the TSOs. While the purple ones where the TSOs requested or submitted basically already derogations. And we introduced a new color, which is this light purple, where we already have from the national NRA, the regulatory authorities, so from the NRAs, where they already granted the derogations. I'm happy to announce that the border-based overview, which was introduced first in July and it's published on the NSOE website, is now updated with the latest informations. So you can already find the approved derogations for Belgium and France. And will continue to collect those informations and plan to provide another update somewhere in December probably, where we will have more information on the currently pending derogation requests. So to provide you some overview before end of the year, what to expect in that sense. Due to these derogation requests, TSOs had to carry out some consultations with the market parties, and we proposed, or we agreed, or promised in the last MCCG to provide you with some overview on what were the most frequent questions that were popped up during these market consultations. I tried to compile those comments or questions into categories. The first category was related to implementation deadlines. As it could be predicted, many market parties were called for shortening the derogation period, or to go live as soon as possible, even with the longer derogation period. And some was even questioned if it's possible to go live earlier. And I think it's important to highlight here as well that once the TSOs have the derogations approved by the NRAs, that means that's the latest point in time when they allow to go live. So that means that they can go live earlier if they can. And of course, we already know that a couple of TSOs intend to go live or even earlier than it is requested in their derogations. So this is something that indeed possible, and it is planned on many TSOs side. The second question was how to prioritize some of the other projects that the TSOs have parallel. Many market participants mentioned Mari, as it was also listed in some of the derogation requests as a project that the TSOs need to implement, and some were advocating to implement Mari, the joining to Mari platform on the TSO side first, while some advocated that it would be good to do parallel. I think that probably all the affected TSOs that are in this situation are planning to join Mari first and then gain experience how the modified balancing markets could work, and then with these experiences to introduce the reduced gate closure time. And the last topic was to harmonize these derogation deadlines and the implementation timeline on the TSO side, which is to some extent, of course, happening. But I think it's important to highlight that in case the TSOs would like to harmonize to a larger extent these implementation timelines and go live dates, then that would mean that they would have to wait for the slowest TSOs in that sense. So that would mean a slower implementation in some cases. So perhaps it's not something that we can do, but what we definitely aim and will do is to try to make them make them happening together as much as possible. So for example, in the first go live window, there are a couple of TSOs that were listed who will go live, and we aim to, let's say, collect the TSOs that are intend to go live in between these periods. So not just one by one, but probably several or more TSOs together. The next group of question was related to, if you can change, Christina, please. Yeah, the alternative for the gate closure time. Of course, it was proposal to decrease even further. This is possible in theory, according to the regulation. On the other hand, TSOs would like to gain experience first with the 30-minute version on a larger scale. And it's also important to mention that so far it seems that the balancing processes are highly affected, so it would be important to see how that could work parallel. And at this point in time, there is no intention to reduce it further, at least for the time being. There were some comments from some market parties to prioritize the cross-zonal gate closure time over any local reduction of gate closure time, which is think, a fair point, and those TSOs that are affected also replied positively to my knowledge. Of course, this is something at the end to be discussed on the local level. But yeah, it's not something that is foreseen, at least to my knowledge, on any of the areas to prioritize any local implementations before the Prozona one. And the last part of the questions are a little bit a mixture, which is providing to or connecting to different topics. First is about balancing energy, whether it's how it's feasible to provide those bids to the TSOs. Some see it's challenging, some even unfeasible, while some market parties seem to be okay with it. I think it's good to highlight that in case any of the market parties see any difficulty to provide the relevant bids on time, and they always have the possibility to basically terminate their trading activity and close their positions, and then they can submit the balancing energy bids. So that's always a possibility. And of course, TSOs will also monitor how these processes will work, and in case there is any improvements needed, then we will discuss those and hopefully come back with some proposals. Some market parties were asked about the local nomination deadlines, how those are affected and what could be done. These are, again, local issues, and where the local TSO is active and they reach out to market parties to align on those topics. So please streamline those requests directly to your local TSOs. And again, to some extent, it's also a local question how the grid security analysis and redispatch markets are organized in the dedicated areas. Here again, the TSOs are open for any kind of consultation with the market parties. And of course, they will reach out or reply to those initiatives that is coming from the market parties. So that's all that we could collect as, let's say, some kind of questions that popped up several times, not just very local specific questions. And I hope that this could provide some useful information also for those areas where this was not relevant or it was not foreseen to have all those questions on the table. And in case you have any further one, I would be happy to answer here or later.
Thank you very much, Gergo. Looking at the participants via Slido, if they have any burning questions. I also see Lorenzo with his hand raised. Please.
Yes, thank you very much for the presentation. I think your first point that you had on the slide on the maximum derogation, I think we were a bit surprised because around 11 TSOs, I think, apply for the maximum derogation up to 2029. So that's why I think the question came from. Other TSOs that didn't like a more extensive impact assessment ask for different derogation dates. I think for the MCCG, we of course welcome this reform. I think it's essential for trading of further integration of renewables and flexible resources such as demand or response or storage. It would be great, again, if in the next MCCG, but we already talked bilaterally, we have then an overview of each single TSO when they plan to go live. So if in the next map we have like a more precise view, if it's going to be 26, 2027, 8, 9, that would be much appreciated, I think, from market participants. Thanks.
Yes, absolutely. That's a fair point. And to be honest, I was also expecting to have this, and we will prepare such. But to be clear, the information on what derogation at the end the TSOs will have based on the approval could also influence this kind of information. So we prefer to wait for the approvals, and then we can come back with you with the exact planning and timing.
Thank you.
Okay, I think we can move ahead. We are a bit behind schedule. We are now entering into the regulatory deliverables and consultation. One methodology, more specifically, will be on the agenda today, and Nimos will report on the consultation that was ongoing, and the proposal was to Acer with regards to the man mix price methodology. Please, Chiara Christophoros.
Yeah, I can take this very quickly because, as you know, we ran last year, at the beginning of this year, the consultation for this methodology, and after taking on board the answer we received and also some discussion we had with Acer and TSOs, we almost made the proposal for the review of the two methodology, the HMMCP for continuous and for day ahead. For intraday and day ahead. In this last submission, submitted version, we just simplify our proposal, and we propose to have a liquidity metrics for IDAS, but also for day-ahead auctions, in order to ensure that in case of triggering event, the traded volume per bidding zone MTU should be greater than 5 megawatt. We proposed this based on the observation we had on IDAS. And so this 5 megawatt was obtained by calibrating the volumes for IDAS, but we thought that this could be used as a principle, like this 5 megawatt could be used as a minimum level of significance for traded volumes in order to trigger the update of maximum clearing prices. So for this reason, we propose this also for consistency in day ahead, even if for the moment we have no reason to think that in day ahead the volumes could ever be below this 5 megawatt. This was maybe one question we received. In a perspective, let's say, with an approach, we can think that this could be useful in future after the inclusion of energy community bidding zone. And for the moment, we do not have any estimate for the volumes exchanged there. But as I say, this 5 megawatt could be just thought as a minimum level of significance for traded volume, and as such can be, let's say, valid both for day ahead and for intraday auctions. Now, anyway, the assessment is at Acer. So the methodology are under assessment from Acer, and the decision from Acer is expected by February 2026. And so this is the main points on these methodologies.
Thank you, Chiara. So we expect a decision basically in the coming months for this representativity indicator, liquidity metric that Nimos proposed to the methodology. And thank you for all market participants that participated to the consultation on this methodology, of course, in the first part of the year. Now we enter the last and regular update on the work plans, this roadmap of SDSC and SIDC projects for Q4 and beyond, obviously. It's still a multi-year roadmap. Can we welcome the chairs to do this this presentation, starting with SIDC?
Yes. Hello, everyone. So if you can start with the intraday, I will be relatively fast today because we heard a lot already from Vladimir. So we are now working on sorry, we are now working on the XBit release 5.0, which is under testing and should be delivered somewhere in Q2 2026. This release is bringing mostly the performance improvements, which is then supplemented with release 5.1, which is bringing another performance improvement, mostly related for binary API, which is the interface improvement, and some other further improvements, which will go live somewhere beginning maybe second or first half of 2027. Then we have release 6.0, which is connected with flow-based allocation in intraday auctions. As you can see, we have the R&D ongoing. The release is under development. Should be developed somewhere later in 2026. Obviously followed with testing activities, which is still to be precise. We can expect the delivery in production somewhere late 2027. And following on that, we do have also flow-based on continuous trading, obviously, but this is still under heavy R&D. We still are expecting the outcome of that R&D somewhere end 26, beginning 27. Based on that, we will be able to plan the development itself and the testing. So it's rather early to say when this will go potentially into production. Also, what you can see on the slide is the fact that we are working for intraday auctions on new releases for our CIP system that will go live together with release 5.0 somewhere in Q2 2026. Related to extensions that are planned, we do have several M&A extensions. You can see IPEX in Baltic region going live in continuous trading still this year, plus going live for IDAS in the first half of next year. In the same period, probably a little bit later, we have extension of Nord Pool in Slovenia, which should occur somewhere around mid 2026. Then we do have Hansa CCR phase 2 implementation and testing still indicative somewhere 2026. So this will be precise most probably next time. We do have Baltic table extension, which is expecting to go live in later 2026. And at the end of 2026, we have also planned the Celtic interconnector, so connecting Ireland, including the M&A in Ireland as well, which is around end 2026, maybe beginning of 2027. And around that time, ETPA is planning to extend their operation to intraday auctions, but this is still a very indicative timeline. And I think I will hand over to Cosimo now for the day-ahead part.
Thank you, Andre. Good morning, everybody. You already saw the slides presented into last mask, so this is information already shared. As usual, we have the different parts of the roadmap. The one related to the development of the assets. We have the queue of releases supporting continuous minor improvement and delivery of new functionalities. there is the R&D part, which is related to main, I would say, three parts. The usual work on continuous performance improvement. This is an always ongoing tasks. It has been also shared in the last NEMO annual report, how along the years, through this continuous performance improvement, we've been able to support the continuous growth of orders, bidding zones, requirements, but always not only keeping but reducing time to first solution. So this is a day-by-day exercise. There is the co-optimization flow of R&D, which is subject of the next intervention just after me, so I do not spend any more words on this. And then there is also the final part of R&D on the change of solver from the current Simplex to Express, which is expected to deliver additional performance improvement, and which it is already planned to be part of the releases of the asset throughout the year, just to prove that we are always working in parallel on the hardware, on the software, and on the fine-tuning of the way it is implemented. Then there are the extensions, similar to what Andre said for the intraday. We have in the end of this year, beginning of next year, EXA entry into new areas and related access to PNB. In the first part of next year, there are the Apex entry into the Baltic M&A and the NOPOL extension to Slovenia, but also then BSP's extension to Croatia and the EDPA entrance into the day-ahead, which is slightly longer time. There are some extensions related to TSO, so the Celtic Interconnector and the CACCR. And then there is obviously the ENC accession, which is more long-term. This is the final part of our roadmap targeting end of 2027. Obviously, this is widely related, first of all, to the timely and proper completion of the process of transposition, acknowledgement of the proper transposition from ENC and the European Commission, then the access to the contract. So here we are targeting the end of the process with a practical go live, but this is the final step. After all of this, plus the testing, will be properly finalized. So basically, this is what we currently have in our roadmap.
Thank you, Andre and Cosimo. There was one question somehow related to the SIDC R&D on the implementation of the flow-based in IDCT.
Yes, this is a very important question, and to be honest, we don't have the final answer yet. This is why we have planned a heavy R&D for upcoming years, where we are trying to investigate several options, which are obviously possible and feasible, and indeed we need to take the performance heavily into the account. So the aim is not to break down the XBIT system. However, implementation of flow-based also in continuous trading is relatively strict requirement from regulating authorities. So we are looking into several ways. We cannot promise now which one is the promising one. We hope to find one at least in order to proceed with the implementation. So further information may come in the future once we progress with the R&D, but we are not yet there.
Thank you, Andre. Maybe then moving still within the roadmap, specifically to co-optimization, unless Lorenzo has something specifically to the roadmap in general or to the flow-based.
Yes, sorry, annoying question on the roadmap. Flow-based in IDAS. I've noticed here that maybe this has shifted by a quarter. So I see here it has moved from Q2 27 to Q3 2027. Is there any reason behind this? Thanks.
Yes, this is still dependent on the testing needs that we need to evaluate. So currently, the solution is under development, and we will see how it goes. Also, there is a very strict dependency on the binary API release that we do have. So we can start testing activities, of course, only somehow around that time. We are trying to optimize the testing, so that now I don't want to promise that we will be able to succeed with optimization of the testing and earlier delivery, but this is our goal at this moment.
Thank you.
Thank you.
You were on mute.
Can you hear me now?
Yes, Maria.
Yes.
Yes. Good. Thank you. So, good afternoon, everybody. My name is Maria Eronen, and MSD co-convener. I'm presenting today about the co-optimization status, where we stand with this R&D track, which was also shown in the roadmap presented by Cosimo. So work has been ongoing since last autumn, where we landed to the consultation regarding the R0 report, which contains the bid design and bid products and pricing proposals in early summer this year. And we have received the stakeholders' respondents on those, and today briefly touch about what are the key outcomes of this consultation we have collected, and are going to provide as well the feedback in the short time notice. In addition, I luckily be in the same room with the Christopher, so we can both then get the questions and try to online answer. So, but I think I will go, and then Christopher will fulfill if there are something to be added. In general, about the feedback about the bidding, there was a general support towards the implicit bidding. However, there are need further explain about the explicit bidding and the challenges it has associated. So implicit bidding is of course that where we are looking further. Then regarding the points that market parties have a consensus, I think for the bidding, the prices to set the premium or somewhere to present the non-linear cost structures is something that is needed to be implemented. And the products, big products, there are all big products has to be supported, so the both linked and combined bids in terms of the co-optimization, where some parties were more favoring about using the combined bids. But like stated, all bid product types were seen necessary, so as well the block bids and scalable complex orders are relevant, but perhaps more for the energy market. Stakeholders' common view would say is that there shouldn't be any limitations on the number of the bids that can be provided. Yes.
It's always under the usage rates assumptions.
Yeah, of course, there might be a limit on the products today as well. So then regarding the pricing, there was the options 0 and 1. The option 0, the no products are accepted block orders, was the preferred over to the other solution, which was the non-uniform pricing. But of course, regarding then the storage orders and demand response, we need to further elaborate on that and consider of the including in the study. And there was also some additional characters of combined and linked bidding provided. but in general received 25 responses, and we are providing the feedback. Thank you for providing your responses. Those are taken in the next report, R1, that is under progress at the moment, and further elaborate of the co-optimization study. So R1 report, then I think we go to the, yes, thank you, the next slide. Currently doing the final review on the R1 report. We are aiming to share that with the Acer by end of November this year. And what we will have as updated to R1. So we go through about consultation feedback in each of the areas, and then we add the recommendation of the design options for the next R&D phases. Of course, we have to remember that this is the long path to go, so we take step by step. So there comes several R&D and the simulations on this when we go further. We try to elaborate reasoning and the explanations for implicit bidding, and then of course the challenges of the explicit bidding that is foreseen. Some examples to be added, how block bids can be added, and the challenges of those. As well, taking account the storage order possibility under the R&D. And the last but not the least, of course, those additional characters that was proposed for the combined bids and linked bids. So that's basically in the content of the R1, where we go with then the simulations that are part of the R2 report. So currently we are preparing the prototype and collecting the bits to be used for first scale of the simulations. On these simulations, we will use the existing version of the Euphemia, and then we merge that with the co-optimization model. And first phase, we are limiting the scope to the smaller bidding zones. So we are taking a part of the bidding zones, and at the next, then scaling it up to the covering the whole core Nordic region. But at the moment, the focus is that we find a good representation of the balancing capacity dataset, as we have to do this from the scratch. We don't have a historical co-optimization data existing. So that's the key. So get the as good as possible data set for these first simulations. And then by end of this year, we are validating the data sets for phase 1, aiming to have the prototype ready, and then starting the simulations in the beginning of the next year. So, but the highlight here that we can't conclude any final requirements, but as this is the process that is ongoing, we learning by doing the simulations, and then the further assessment is needed as well, the further simulations. I think that was the last slide on the co-optimization. If there are questions, I'm not sure if I can see this.
Thank you, Maria. Indeed, this was the last slide, I think, in general. Looking at the market participants and also the conveners, if there may be any other remarks while there are questions maybe coming in still, or any concluding thoughts.
No question, I think, on the slide though, Christina, but maybe on the side of market participants, thank you very much for all the slides as well. We very much look forward to the Q&A document that will be provided in the coming days. or weeks. I don't know actually when it would be provided, and that would answer also the questions that were sent up front the meeting as well. So thank you very much for that.
Okay, last remark from my end. Please don't forget the glossary at the end of this presentation. A lot of naming conventions and abbreviations. So we just summarized some acronyms for you to get used to it and have the right understanding. Thank you for the constructive session. This was the last MCCG of the year, and it's also the last MCCG I was convening as a co-convener on the NEMO site. The co-convenership will change as of beginning of next year. So the first event next year will be co-convened by Carol on the NEMO site. Andreas and Zeli are still part of the journey. So thank you for this opportunity. Since 2022 now, quite a journey. From the inception of it till today, I think we have fostered a good cooperation and ping pong or exchange that I consider as very needed and clearly fruitful for the cooperation. So thank you for that. And for me, it's this is the end of the co-convenership.
Pierre, from my side, thank you very much for the cooperation we had during the last year. It was very fruitful, and you led the whole forum very well and with very good results. So thank you from my side as well.
Thank you, Pierre.
Good.
If I can add from all NEMOs, a warm thanks to Pierre because he really led it a beneficial and innovative exercise for us all. So thank you so much, Pierre.
Thank you all. It was great experience. I'm sure we will continue again in 2026 with Carol.
Thank you so much, indeed. Thank you, Pierre, and looking forward for the next year, for the next meetings. So great structure and great participation. We'll keep good work. Thank you so much.
Looking forward to having you in the group, Carol. Yeah.
Have a good day. Thank you.
And until next MCCG meeting. Bye bye.
Thank you.
Bye bye.